It's time for the Jupiter Joe Money Show. I'm Jenny Thomas. We have Dana Thomas and our host, Jupiter Joe.
That's right.
First time in the new studio here.
That's right. The Jupiter Joe Retirement Advisors show we're doing today.
Exactly.
Yep.
So I wanted to dive in today. The Fed. They delivered their final rate cut of the year, a 1/4 point cut as expected. What are your thoughts on how people should be thinking about this cut? Does it affect people?
Oh my God, I have so many thoughts. President Trump is right. How can one man have so much influence on everything that happens with interest rates?
Right.
It can mess up the market, the stock market. It can mess up your mortgage. It can mess up interest rates at the bank. I mean, it shouldn't be that difficult. I believe the rates should be level unless there's a huge major catastrophe like there was with the pandemic, COVID. But it's just taken too long to get back. And one person shouldn't have that much power regarding the monetary system. That's my real opinion. You want another opinion?
Yeah, let's hear it.
I mean, well, it's just, think about it. It affects everything. And right now, interest rates are so high for buying a mortgage. No wonder why nobody can buy a house. I mean, rates were up as high as 8% for a 30-year fixed. Now they've come down and they're in the 6 something range, and they're going to go a little lower. Now, that's the good news. Interest rates going a 1/4 point lower means that the mortgage rates are going to be lower for buying a house. Maybe your credit card will go down a little bit. But it means you're going to earn less money on your savings, your checking, your CDs, money markets. All those rates, your high yield savings accounts aren't going to be so high yield anymore. They're all going to come down. So that's the bad news for people that listen to our show. Fixed rates are coming down.
Well, we've gotten a lot of calls over the past couple months just specifically about CDs and how the rates are going to be lower, or they already have already gone lower.
Yeah, I mean, people are coming to my office every day and they say, I was getting 5% on this and now I'm getting 3.5%. Now they're shopping, which it's smart. I would say for anybody out there, listening today or watching our show, our podcast, I would say, shop around because, you can lock in rates with us right now in the 5% range, where at your local bank, they're 3% or 3.25% or 3.5%, whatever they are. And they have a lot of these teaser rates. We always talk about the teaser rate. That means it's only good for 6 months. So don't just tie your money up for 6 months, because 6 months from now, it's going to be even lower. Try to tie your money up as long as you possibly can. When we lock in rates for clients and for their rates, we're going to lock in for 3 years or 5 years. So it's a better deal for you. The longer you can lock in the rate, the better you're going to make money and interest.
And another point on locking in rates, there's people out there who have a CD. It might not be for next year, maybe February, where you can lock in a rate for 60 days. And then when your renewal comes up, you know that you're still getting that rate with us, with the insurance company.
Correct. Now, Dana, interesting enough, is looking for a house, and you want to buy a house, right? And the interesting thing is, you can afford more house when interest rates are lower.
Right, exactly.
And that's the key to it. And, when me and Mom bought a house years ago, rates were high too back then. They were in the 5. Sure, rates were always high. Look, banks like to make money. They're going to charge you more interest. It's just the way it is. But when you have a lower rate, you're able to get into a property. That's why years ago they did these adjustable rates where you had a 3-year adjustable or a 5-year adjustable, and it enabled you to get in the house and then refinance later and build some equity. And that's what's important,
We also hear from a lot of clients who are purchasing new houses now, where they're having trouble with getting a loan because they don't have, they might not have income coming in.
Right.
And an annuity is something that would be income coming in if they're not working, if they're retired.
Yeah, and a lot of people, I hear clients tell me all the time, hey, this is going to pay my mortgage, this annuity, or this interest is going to help me pay this bill or that bill. And some clients think of it like that. Besides, now I had a client in yesterday, he said that his annuity income is used specifically for travel. I mean,
oh, really?
That's not a bad deal, you know?
And he's traveling everywhere, and I know who you're talking about.
Yeah, and it's interesting, if you can use your money to pay a bill, use it for traveling, visiting the grandkids, visiting your girlfriend or boyfriend in another state, whatever it is. I mean, that's a cool thing, you know?
We even had one client who said that they're using the annuity payments they get monthly for their HOA dues.
That's a good one.
So they don't have to worry about
There
it.
you go. No, it's interesting. We had our annual, what is it called? Customer appreciation.
Holiday, customer.
Christmas, Hanukkah party, all thrown together. And we had a nice time, and we enjoyed it. And one of the things there was a retired police officer who we know, Steve Masano, great guy, and he's fun. And make a long story short, he was telling us that because of us, he's actually doubled his income using annuities to make his life easier. Mm-hmm. He was on a fixed pension from the police department, you know. Mm-hmm. He's a public service worker, and he had a pension. And now he's actually got double the income coming in because of the annuities that help them. So it's nice to see people that are using the annuities for something that they really want their lives to, you know, excel with, you know.
Exactly. And we hear it all the time. Mm-hmm. Even leaving their job and being retired.
Right.
You know, they're making more income now than when they were working.
Some people do have that situation. We have several Publix workers, Publix, you know, supermarkets have great pensions, and they accumulate great stock with the ESOP. However, a lot of people don't know how to take that money and turn it into an income stream. So we help a lot of those Publix clients. We help FP&L people, Nextera, get to the next level where they want to turn their money, their lump sum of retirement money, into income, an income stream, you know.
And if you're looking to talk with Joe, if you have questions about your retirement, give Jupiter Joe a call, 561-743-0999. You can also go to our website. It's super easy to book an appointment. You can check out our calendar. You can do a phone appointment or an office appointment here in the office in Jupiter.
Let's talk about that too, because I just want to go through what people expect when they talk to me. So I like a phone call initially. I would love you to come in and sit down and chat with me. Not everybody wants to do that. Not everybody has time. So initially what I say to people is give me a call, 15 or 20 minute introduction call. I'm going to ask you, number one, your age. Number two, what's your goal for the money? Is it income? Do you want to grow it? Do you want growth? Are you looking to pass money to your husband, your wife, your girlfriend? We had that yesterday. Dana kind of chuckled at that. We had a guy in that wanted to leave his girlfriend some money. We can do that for you. You know, we try to help you with the problems that you have, and we see if we can do something.
Exactly. And I think a lot of people, once they have a first initial phone call with you, they start going through their documents or their junk drawer where the statement is, and they start getting, you know, what they want you to review with them.
Exactly. And, you know, the phone call is really an introduction to get an idea of what we can do for you. And I'm going to tell you, I'll be the first one to tell you, if I don't think I can help you, I'm going to tell you. We had a lady called back before we started going on the air today, and she's in a different state, and she had legal issues. And I said, look, I'm not an attorney. We do financial and retirement planning. I would suggest you get an attorney and ask them these questions about your will, your trust, your deed, you know, passing assets. And that's the best way to do that. We are not one of these companies that do it all. We know what we do best. We do retirement planning, you know. We're retirement advisors. And it's important to understand that when you have a specialist such as us, me and Jenny and Dana, it's important to understand that we can help you in a specific way. We don't spread ourselves thin and give you all this advice about stuff we don't specialize in. We specialize in annuities. We specialize in retirement planning, and that's what we do.
You know, we also heard from a recent client, they're a couple, and they said, you know, we've had advisors in the past. They left their current advisor after they came to you. Mm-hmm. And, you know, they said we get this personalized, you know, advice. We have the whole office. We have us here. Mm-hmm. So it's a different type of relationship with your advisor, which I think out there you don't really get.
So many times I've mentioned that, you know, you take advice from somebody that's a financial advisor, and you basically, what kind of level of experience does that person have? Now, let me talk about this in a good way. I don't want to tear down anybody's walls here, but the bottom line is some people aren't as have as much experience as I do, right? Mm-hmm. I've been doing this for over 30 years, 25 years in South Florida, and over 30 years as a financial advisor. I've worked for the banks. Okay, I worked for financial institutions doing stocks, bonds, mutual funds, life insurance with John Hancock, First Union Bank. So I've learned the business over the years, and there's a lot of intricacies to it and how it works. And that's what I bring to the table. So when I talk to somebody, I'm already familiar with most of the products that are around out there. Does that make sense?
Right. And I think, a challenge people face with their advisor and why they sometimes want to break up with them is because they're not listening to their specific needs and their goals for the money. They're just kind of giving them the generic run-of-the-mill advice that they would give anyone who comes in.
Well, that's funny. Brian Craig and I were talking on his show, and we were talking about breaking up with your advisor. And we've done a show on it too. And sometimes it's not an easy thing to do. We had a husband and wife come in. I think you know the couple. And they said, hey, we just want to get away from this person. We don't like the way things are going. Look, it's business, and you have to separate the two. And that's what we bring to the table with clients. If you want to break up with your advisor, we'll show you how to do it. We'll also facilitate how you can move your money, because it's getting harder sometimes to move some of the money, for the funds from your 401k or your IRA to an annuity. It's a process. Jenny happens to be an expert in that area. I'm an expert in that area. Dana's learning that process. And that's what we do for clients,
Exactly. So, Joe, what do you think about the projections for 2026, especially if you're trying to retire next year?
So let's talk about the market. I mean, look, the stock market has been very challenging this year and as up and down as it's been. I think the S&P still averaged like 10 double digit. I think it was like 10% year to date, but it's been up and down. Now, some people don't like it. I don't like it. Mom
hates it.
My wife does not like it.
Doesn't want to hear about it.
She doesn't even want to talk about it with me. Now, here I'm in the financial business for years and years, and she's like, do we have money in the bank? I'm like, yeah, don't worry about it. She's like, okay, I'm good. But other people, I had many times people tell me, I can't sleep at night thinking about this stuff. I don't want the stomach churning over the market. But I do think in 26, the market is going to do better, and in 27. Now, you can take advantage of that without risk by being in one of our indexed annuities. An indexed annuity allows you to share in the potential growth of the market, an indice like the S&P 500 or the NASDAQ index, and you share in that return. And if that market index goes up, your money goes up. However, when the market goes down, you don't lose anything. You get a zero. The power of zero is a big deal. Would you rather have an up year of 15% and then next year lose 20? Or would you rather earn 10% and then the next year you get a zero?
So with this annuity, it's almost a way to share into the profit of the market without losing everything if
Correct.
It does take a downturn.
Correct. And people really like that. It's a good product, especially if you think the market's going to do well. We had an 80-year-old come in here, 80-year-old guy come in. He said, look, I think Trump's going to be great for the economy. This was last year, or at the beginning of this year, I think it was in January. And he said, look, I really think Trump's going to do well for us. And I want to be in the market, but I don't want to lose any money. So we put him in an indexed annuity with the potential growth, but no downside. There's no downside. So you have downside protection. When the market crashes or loses 10 or 15%, you don't lose anything. So you're constantly going up. You're not constantly doing this.
Mm-hmm.
Look, you don't see me going on a roller coaster anymore, do you? Okay.
I don't think I've ever seen you go on a roller coaster.
Right. When I was in my 20s, I'd be the guy out there in the front, screaming, yay, But, the older you get, the safer you become. And it's the same thing with your money. You don't want to lose any money. So therefore, you're not in the risky investments. And that's why what most people have to understand is the reason you're putting a percentage of your money in safer products, i.e. savings, checking, bonds, annuities, real estate, gold. I know there's a question on here about gold and silver. One guy said to me last week, he said, what do you think about gold? I said, yeah, buy it. Now, I don't make a dime telling that client that, but if you feel that you want to diversify, why not, right?
Right. And I think when you compare that to a 401k or something that's in the market and, it's going up and down, if it's going down and you've lost money a few months ago, a year or two ago, you don't have the timeline. You don't have enough time to make that amount back.
That's so true. What do you think the first question I'm asking is your age? If you're in your 40s or 50s or 30s, well, God, you have 30, 20, 10 years to invest. But if you're in your 60s, 65, like I am, you have to play it safer. And that means your time horizon is not what it used to be. That means, therefore, you cannot take the risk you used to take, right? I mean, it's
Right.
pretty simple. I mean, that's the other thing. Let's talk about my book for a reason. I wrote the book Retirement Know-It-All, which you guys can get a copy of by going to jupiterjoe.com or giving us a personal phone call at 561-743-0999. You get a copy of our book. There's a lot of information in there. It's an accumulation of my background, what I've done in this career, and it helps people. We give it to you free. We send it to you free. It doesn't cost you anything. There's no obligation. You talk to me on the phone, there's no obligation. You come in for an appointment, there's no obligation. Now, why do I say that? Because it's true. We're not going to pressure you. It's funny. I had a client in last week, and the woman said to me, you make this so easy. And I said, well, that's the way it should be. I can make it harder on you, and she was laughing. And our job is pretty easy. It's to help people. Show us what you want to do. Show us where your money is, why you're not happy there, and we'll show you what we can do with either some of your money or a percentage of your money. Right?
Well, it's funny. I was just thinking about the other day. So I have an IRA in Fidelity, and it's invested. And Jenny actually bought some of the stocks for me and kind of picked my portfolio.
Right.
And before, I was earning pretty much nothing, like 10 cents for the whole year. But I wasn't losing any money. Now I see it going down, up, back, forth. And I was yelling at Jenny, what'd you buy? And Jenny said, well, you have 30 more years, it'll come back.
Correct.
So if you're not in that position, I mean, that's a scary thing to be checking it and seeing downswings every other day.
Well, Dana and I had lunch and we were talking about it, and she's like, yeah, I'm losing money left and right. And I said, you've got the time to recoup. Just leave it. Don't worry about it. Now you're in, the market. You're directly invested in the market for your IRA. So if you're younger, when you had your 401k, I'm trying to put this in perspective, you had a 401k when you were younger, 30s and 40s, you don't care if the market goes up or down. You want it to go up, but if it goes down, it goes down. But when you get into your 60s and 70s, you can't take those chances anymore, and it's that simple.
Exactly. And I think this year, the last few years, there's been a lot of emphasis on education, financial education, retirement planning. They have workplace, resources, and they have a person there.
Fintech is so big right now.
Right. And, that's why you started this radio show and you wrote the book, is to help people know, give them the information that they need to know.
So we've been on the air for over 10 years. I think it's 15 total now. And the first thing I told Kathy Green, my co-host back then, was, look, all I want to talk about is things that are going to help people, inform them, and educate them. The reason we give you the book is hopefully it gives you some information. I've had great results from clients who have read the book and said, hey, we've done this, we've done that. It's a starting point. I always say that our job is to get you from point A to point B. Point A could be, I'm retiring in 6 months. I'm retiring in 24 months. How do I get from here to there? Now, you might say, oh, that's pretty easy. No, it's not. Most people don't know how to take their 401k or their 403b, whatever it's called, whatever you have, whether it's a letter, a number, or a combination of letters and numbers, it all means that your money's tied up in that system. It's probably in mutual funds and stocks and securities, and there's nothing wrong with that when you're younger, but when you're older, you want to start transitioning to a safer portfolio. And how do you turn your 401k or your IRA or your 403b or whatever it's called into income? And how do you make your money last the rest of your life? That's the secret sauce that we bring to the table here. That's what we help people with.
So back in 2008, 2010, when they had, the 401k, they called it a 201k because it went in half. Were annuities as big, 10 years ago as they are now? Because there's definitely a big push for annuities now, that guaranteed income, sustainable, predictable income that a lot of people want now.
Well, there's more money now being put into annuities than there ever has been in the history of America. And it's simply because people want safety.
Yeah.
They're worried about risk. That's why the gold market, we can talk about the metals market. Silver is over $55 an ounce. Gold is up to like 40, whatever the numbers are. I'm not looking at the screen, $4,200 an ounce. So the numbers are up there. There's still room in that too. I mean, I hear people telling me that, gold's going to go to 5,000, silver's going to go to 100. It probably will. Now, why do people do that? It's called a flight to safety. They want to be safer with their money. Not everybody has the stomach to be in the market. I do. I like it. I like the feeling of, one day it's up, one day it's down. I like taking profits too. I'm more of a day trader. If I see that I'm up $1,000 or 5,000, whatever the number is, I say, okay, I'm going to take that profit now. And I don't care. People say, oh, you got to pay taxes. Taxes are taxes. Dana and I had this conversation, and Jenny did as well. When you pay taxes, that means you made money. That's a good thing, not a bad thing. Everybody wants to have no taxes. I do too. It's not possible. You're in a debt-driven society, and one of the things to help other people in the whole society is you got to pay taxes. It funnels the system. It keeps it going.
Right. And talking about risk, there are people out there who don't want any risk. They like their money in the bank. And sometimes that can be not great if you're retired.
Jenny, there's $3 trillion right now on the sidelines in money market savings accounts, checking accounts, because people don't want to take the risks in the market.
Right. We actually had a call today just earlier, and the man told me that he's retired. He's taking Social Security, but he has this cash lying around doing absolutely nothing.
A lot of people do. So years ago, when we used to do a lot of seminars years ago, and the question came up, do you have an emergency fund? And the clients would say, yeah, they'd raise their hand and say, yeah, I have, how much you have? 50,000, 100,000, 250,000, 500,000. And I said, and what emergency costs 250,000? And I say, your kid's abducted and they're held for ransom in a foreign country. I mean, you just don't need that much money sitting in a checking account. You have to put it to work. You can't let dormant money not make money. Okay, that's why the fixed annuity is a great vehicle, because we sometimes, if somebody comes in with $500,000 using that number, you might put $250,000 in a 5-year, multi-year guarantee annuity where it's locked in for 5 years, 5% or 5.5%, no fees, no charges, no risk, and then you'll have an index annuity with $250,000 in it, but that has an opportunity for growth. So you have the best of both worlds. But in no time do you ever risk your money where you can lose money. Okay, now unless you disclosure, folks, if you're listening right now, annuities do have surrender charges and some fees, and we disclose that and talk about how that works with everybody in their particular situation and what annuity you're purchasing.
Exactly, and especially with having predictable income, that's one of the biggest things people come to us for. Turning their retirement plans into income. How does that happen?
So Jenny, you wrote that show, and I've had so many comments on it about predictable income and to the penny.
To the penny.
So everybody knows to the penny what their Social Security is going to be. They know to the penny if they have a pension plan what their payment's going to be. Well, why shouldn't you know that with your 401k money or your IRA money that's sitting in a mutual fund somewhere? By the way, we had a lady come in yesterday. She has, I won't tell the number, but she had about 15 or 20 different accounts in different spots all over. And I said, can you keep up with this? She said, I can, but I'd rather have some simplicity here and put it together. And we figured out how to do that. Sometimes you just have to kind of break it down and make it simple for yourself. Some of the stuff's complicated. Let's not fool one another. It's complicated stuff. And we try to simplify things for you. I think that's an important part of retirement planning, is getting down to the penny. Hey, I know I have my IRA, my 401k, my pension money, my Social Security numbers, this annuity that Joe took care of for us. It's a good thing to know how much exactly you have to pay the bills.
Right. Jenny and I always joke you would never take a job without knowing how much your paycheck is going to be.
After tax.
After tax every single 2 weeks.
You know your net number, right?
Yes.
And the other thing we always talk about too, and this is one of the processes that we do with a client, is we talk about, not in exact detail, but we'll say, well, how much do you need to live on? $3,000 a month, $5,000 a month, $8,000 a month, whatever it is. And I say, well, how much guaranteed income do you have? So usually it's just Social Security. I have Social Security. Most people don't have a pension. I think it's only like 22% of Americans have a pension. Now, if you don't have a fixed income that's locked in and guaranteed to the penny, well, and if you have a 401k sitting there, you don't even know what it's doing and how it's going to get to you in income. maybe you should consider sitting down with us and just chatting and talking about what we can do for you. You know?
Also, just one more point. I think that's why the carve out is so popular, because people are transitioning that money to income from risk to safety.
So let's talk about the carve out, and we're gonna, during these shows, we're gonna bring up a lot of topics that may be of interest of you. Maybe it's not of interest to you. Maybe it'd be interest to somebody else. But we bring these topics up so you get an idea of what you can do with your own money, right? The carve out works like this: you have a 401k and you have $300,000 in it. You're not ready to retire yet, but you want to take some money out. You want to carve out an amount of money and put away $100,000 in an annuity that's safe, but leave $200,000 in the market or leave $150,000 in the market. So that carve out really does work well, Jenny, and we use it a lot for clients. You know,
Exactly. So we're going to wrap up today's show. It's our first show at the Jupiter Joe office. Thank you so much for listening. If you'd like more information, go to jupiterjoe.com. You can give us a call. We answer every single call, 561-743-0999.
Thank you, everybody, for taking the time today. Appreciate it.